Hello there, this is Amy from iTradeAIMS.net again. The question of this video is how to use the banana setup for the 4-hour chart or the daily chart. Now, the most important concept for the banana signal itself is the impulse move and the pullback. But before that, before you look for it, there's the context. So we need the context. And where does the context come from? It is the market cycle. Now there's another video in which I explain the market cycle, and I have learned that from Al Brooks, from the Al Brooks trading course guy. He's been doing it for such a long time. Great 3 books, but in simple, what I like about his teaching is that he focuses on binary, keeping it binary. So the market is either in a trading range or it's in a trend. If it's in a trading range, it's either in a tight trading range or a wide trading range. So over here, this overall, what we see is a trading range. Why is it a trading range? Well, if I marked this is the highest point on this chart over here, and this is the lowest spot. So if I actually extend these lines, once I have identified a swing high, which is the highest, and a swing low, as long as price stays inside it, it is a trading range. Now, inside this range, there can be trends. For example, this trend up and this down. But this is just one swing. So if I look at this and then I look to the left, is this the highest high? No, it's not, because it's lower than that. But it's higher than this. And this is the lowest low within this. So for this portion of the time, it was a downtrend within a trading range. And for this portion of the time, it was an uptrend within the trading range. From that point of view, when you see this impulse down, or let's suppose we go to this one, you see this impulse up, and then this correction down. This was a nice, lovely setup, a banana long setup, but within the wrong context because you are going in sideways. And let me prove that to you by going to the daily chart. If you go to the daily chart, what do you see? Well, we have seen a very strong downtrend, which then turned into a trading range. And that is where the market cycle helps. So if we look at this chart, and let's suppose I start from this region, what do we see? We have a highest high there, and we have a low here, which is higher than this. So we don't have a sequence of higher highs and lower lows. So I can call this up to here a trading range. These are my highs, these are my lows. I'm waiting for a breakout. What's happening here? This is your breakout. As soon as this breakout happens on this time frame, you want to wait for that pullback and a retest. So ideally, if we had a 2-candle pullback that was touching this, and then we had a banana signal, that will be the best setup. But what we can also do is that because this is a daily chart and this is broken out, and now we have a strong trend candle. Why is it a trend candle? Well, it's bigger than the candles to the left, and it has literally no wicks. So very small wicks to no wicks is also a requirement. If I put a line on this, now the context is correct. Now I go to the 4-hour chart to look for a pullback between the 2 days. So where is that pink line? I'm going to look for that. Here it is. Now, if you look at this, price started to go. If you look at my the phases of the trend, in trend you will have basically 2 phases. One would be the breakout phase, where you'll have a consecutive candles. So let's go to the daily chart again. That's your breakout phase. 1, 2, 3, 4, 5. None of the candles have overlapped the other. None of the candles have broken the high of the previous. This one has broken slightly, but then again a continuation. So that's a breakout phase. And then when the breakout phase happens after the first pullback, then it becomes a channel. So there you go. Now it became a channel. That was your signal. So let's focus on that again on the 4-hour chart. What do we see here? We have a breakout. After the breakout, we didn't see an immediate pullback. Now, if that happened, here would be a beautiful signal for us. But it didn't happen. What did it do? It instead turned into a channel. Channel means a loss of momentum. See? And usually after a channel, price would go into a trading range. What did it do? It went to a trading range, sideways. Now, here it's a trading range on this time frame, right? But if I go to an hourly chart on the 12th of November on this is going to be a wide trading range. Let's go there. See this? It's actually a tight trading range on this. So what is it creating? It's creating a setup 1 because this is our 3, this is our 4, and that's the breakout into that. So we want to catch this, but in this, on the 4-hour chart, it was not a setup. Maybe on a 6-hour chart, it could have been a setup. But then, that same concept, look at it. 4-hour chart, we didn't get a setup there, but then we have a trading range and there's a breakout again. So same concept. We have a breakout. Now you want to wait for your signals. In this case, you have 1 and 2. This 2 is actually tradable because we will not trade the empty 1. But we can sometimes trade the empty 2 because 2 is a very good signal. It's 2 candle pullback. Ideally, I want this high to be touching that dash line. But if I saw this, I would definitely have taken it because it's an overnight small candle. Very good signal. 15, 13, 14 is your stop loss. And there you go, 28 is your target point. This one I will not take. This 2 is now a bit too late. But if you took it, it should be fine. Well, the reason I wouldn't take it is that if you look at this, it's a tail. The next candle is bullish. Same opening, and then this is same. So I will not take this. And then after that, I won't take this either because now I don't have that. I rather want market to be in a trading range, and particularly in this type of trading range because it's already broken out of a certain trading range on a higher time frame, and now it's going and then comes down. Now, this again, if you look at it, it's a trading range. There's a breakout, then there's a pullback. You have a signal, you take these trades. From that point of view, this is not a very good signal because of the context, because this is within a strong, within a sideways market. But if the trading range itself is tall, you can sometimes take this trade. This was a nice, lovely push down and a pullback and a lovely signal. I would rather want this to be lower than this. I would rather actually want it to be even lower than this, and then I would like to trade that. If you are on the daily chart, then you can just stay on the daily chart, and all you have to do is to establish whether it's a trending market or it's a trading range. That what you have to learn, and that's for the market cycle. So if you can identify this as a trading range, then you can wait for the breakout and pullback. In this case, the pullback did not happen. It happened a little bit late. Again, you had a signal, probably 1 hour. This would be a break even. Is this a signal now? Now that's the question. Is this a signal? It's not. Why? Because it's in a trading range. We don't have the impulse wave. So I want the impulse to be immediately before the signal, not this impulse. This impulse is not considered for this. This impulse itself is a very, very tall wave. I don't want this here. I want this 2 or 3 candle impulse and then 2 or 3 candle pullback. Not this whole thing. Now, this whole thing would be suitable for the weekly chart. If I go to the weekly chart, what do we see? We have two breakout candle, and then we have a pullback forming. But then when I look at this weekly chart entirely, then I look at the wave. Where is my swing high? It's all the way up there. Where did it break? It was here. So on the weekly time frame, this was our first pullback. This was our second pullback, and in this case the second pullback was better signal because it broke the lows. Look at this. See, that's the trading range, that's the lows. It breaks it, pulls back, retests. We have a signal. You go short and let it run, or have a 2-hour target point. Likewise on this. So we have a trading range on this. It goes up, hits the previous highs, pulls back, creates a pretty good signal. You could have taken it, or you could have filtered it based on the thought process that it's in a trading range. So that's how we want to deal with this. You can stick to a single time frame if you like. For example, if you just stick to the hourly time frame, then here you go, you have a signal. Why is this a signal? Because you have a move down, then you have a trading range, then there is a breakout of the trading range, which in setup 1 format we would say this is a wave 5, right? There's a breakout, and then you have a pullback, and then you have a signal. This is a classic signal, because if you go to, let's say, an M15 chart on this, it's going to be a setup 1. See this? Well, it's not setup 1 on the M15 chart, but it's definitely going to be a setup 1 on the 5-minute chart. There you go, like so. So when you have a pullback setup going on the hourly chart, we're not going to drop to the 15-minute or 5-minute chart. We will drop to a 5-minute chart after this type of candle or this candle. Because once we see the breakout over here, let me mark that, we're going to look for a pullback setup on the 5-minute chart. And then when we went to the 5-minute chart, we did not really see a strong impulse move here. Why? Because we did not choose a good trend candle. This was not a good strong trend candle. This was a good strong trend candle, but it's already late now. So if I went after this candle, it's not going to be too bad. But if I go there, what do I see? I see that it's dropped all the way from there, and then it's giving me a pullback, so I'm not interested in this. I would rather have this bit to be impulsive and then your first pullback, retesting those. And it's the same concept, whatever time frame you want to trade it on, just stick to it. I hope it makes sense.